Hey everyone, welcome back to Corporate Decoder. Today we're diving into CoreWeave's latest filing, and let me tell you, they've been busy little bees in the capital markets buzzing about, well, let's just say they're raising quite a bit of cash, and we're going to decode what that means for you. Before we dive in, if you love getting the real story behind corporate announcements, smash that subscribe button, and hey, join our Discord community linked in the description below, where we break down these filings even further. So what's the big news? CoreWeave just announced they've priced a private offering, which is essentially a way for them to borrow a significant amount of money. They're selling what they call senior notes, which are basically IOUs to investors. And get this, they're raising a whopping $1,750 million. That's $1.75 billion, folks. Now, here's some interesting detail. They originally planned to raise $1.5 billion, but then they boosted that by another $250 million. This indicates a lot of investor appetite for this deal, or perhaps they realized they needed even more cash to fuel their growth or pay off debts. These notes are due in 2031 and they're carrying an interest rate of 9%. That's a pretty good chunk of change they'll have to pay back in interest over the years. Mark your calendars. The deal is expected to officially close on July 25th, provided all the usual paperwork and conditions are met. These notes are being issued at par, which means they're being sold at their face value. They are senior unsecured debt, which means if things go south, the folks who bought these notes get paid back before other types of debt holders, but after secured debt. Also, some of CoreWeave's own subsidiaries are backing these notes, giving investors a bit more confidence. This whole deal was offered only to big shot investors like huge investment funds and wealthy individuals, both in the US and overseas. They're not selling these to just anyone like you and me on the street. This private offering is for sophisticated investors who know what they're doing. So what's all this borrowed money for? CoreWeave says they'll use it for general business stuff, which sounds a bit vague, but they also specifically mention paying off other debts they already have. That means they are managing their debt load, possibly refinancing at a better rate, or just using this new money to shore up their financial position. Plus, of course, they'll use some of it to cover the costs of putting this whole borrowing deal together. This announcement itself is part of a press release they put out. Think of it as a public announcement saying, hey, we're borrowing a ton of money and here are the details. Now, like most companies, when they talk about the future, they have to include this little disclaimer. It's a legal requirement. They're saying that a lot of what they're talking about involves predictions and educated guesses, and that actual results could be very different because of a bunch of things that could go wrong. They're basically admitting that their plans aren't set in stone. Things like completing this debt offering on the terms they want, or even at all, depend on a lot of external factors. Think about the economy, political events, or just how the overall business world is doing. All of that can impact their ability to get this money and use it as planned. They're being transparent about the uncertainties, which is good. But it also means we should be mindful that their future performance isn't guaranteed. And who's signing off on this important document for CoreWeave? It's their Chief Executive Officer, Michael Intrater. This shows the top leadership is directly involved and responsible for these financial maneuvers. Now let's shift gears and look at our analysis of these numbers and what they mean for CoreWeave. The fact that they are raising such a massive amount of money, $1.75 billion, signals strong ambition, but also highlights a need for significant capital. As a company in the fast-growing AI infrastructure space, this kind of funding can be crucial for expanding their data centers, acquiring new technology, and staying competitive. However, taking on this much debt also means a substantial future obligation for interest payments and principal repayment. This 9% interest rate is not insignificant, and it will be a recaking as that impacts their profitability. It tells us that investors are willing to lend to CoreWeave, but they are demanding a premium for the perceived risk. The increase in the offering size from 1.5 billion to 1.75 billion suggests that demand from institutional buyers was high, which is a positive signal about investor confidence in CoreWeave's business model. And growth prospects signal about investor confidence in CoreWeave's business. The wording about using proceeds for general corporate purposes, especially including repayment of outstanding indebtedness, is common but worth dissecting. It suggests they are either optimizing their debt structure, perhaps replacing more expensive debt with this new issuance, or managing working capital needs. In essence, they are strategically managing their balance sheet. The fact that the notes are unsecured is also important. It means the lenders are relying on CoreWeave's overall financial health and future earnings rather than specific assets as collateral. This also means that if CoreWeave were to default, these bondholders would rank with other unsecured creditors. Looking at CoreWeave, they are in a fiercely competitive market. Companies like Nvidia, Microsoft, Amazon, and Google all have massive investments in AI infrastructure. For CoreWeave to thrive, it needs to continually expand its capacity and offer compelling services. This debt financing is likely a key part of that expansion strategy. The real question is whether the returns generated from these new infrastructure investments will outpace the cost of this debt. The company's filings, especially their risk factors, would usually detail threats like increased competition, technological obsolescence, and the ability to secure and retain customers. This debt issuance is a bet on their ability to navigate these challenges successfully, powered by the ongoing AI boom. In the end, this filing showcases CoreWeave taking a significant step to fuel its growth through debt. It's a move that could propel them forward if managed wisely, but it also significantly increases their financial obligations. We'll be watching closely to see how this capital translates into tangible growth and if they can manage the increased debt burden effectively in the dynamic AI sector. Alright, that's our deep dive into CoreWeave's latest financial move. What's your take on this massive debt offering? Do you think it's a smart move for their growth, or is it too much risk? Let me know your thoughts in the comments below. If you found this breakdown valuable, please give this video a thumbs up. It really helps us out. And if you haven't already, hit that subscribe button for more unvarnished corporate insights. Don't forget to join our Discord community using the link in the description for more real-time discussions and analysis. Thanks for watching, and we'll see you in the next one.